Hey guys, Mike here. So, oh boy, what another red day in the market, and you almost feel like it's August 1st through August 14th all over again, right? We're getting these red days, and what's driving the markets is news right now, or at least it's what's the market's using as an excuse to sell the market off because this same data didn't mean anything a couple months ago, right? 3, 4, 5, 6, 7, 8 months ago, it meant nothing. Now all of a sudden, we're sensitive to news and we're back in this. Is the Fed going to hike again? We're not sure. And then data will come out saying, oh, this is great. They're not going to hike anymore. Let's go up. And then, oh my God, they might still hike. So we must go down. But that's what the market does, right? It uses this data. And so we're going to go into that, something you definitely need to be aware of. Another thing I think is going to push the Fed in a corner to stop running off their balance sheet for sure. And it's mind-blowing numbers, by the way. And then we'll get into what China did to drive down their stocks into the ground and also drive Apple down once again today, as you can see. And this is one of those things, as Apple goes, the market goes, right? And so you've seen some pretty down days on Apple, and where's the market been heading? Down. But this is the news, and again, it's funny to me that this is what really made markets go red. But as soon as the job data come out, and it came out soft, not really like, I should say hot actually, because people were expecting this to like keep going up, and a lot of people were gonna, be filing claims and stuff, but they didn't. It actually came in less than what was expected. So they went, oh my Lord, the Fed's gonna have to hike again. Maybe not September, but way in November, right? So it sold the markets down. But the other thing to watch out for is oil. And I meant to put this in here yesterday, and one of our members sent me something saying, hey, there's a major resistance line coming up. So I went back and looked at the chart. And they're right. There is this major resistance line here, and there's another one right above that as well. And so if it breaks above these two lines right here, you can see a major, major breakout, obviously, right? And the reason for this is because who runs the oil markets? Well, pretty much the cartel. And you can see what did they come out with yesterday. Diesel prices have climbed more than 40%, which is the most important one, in U.S. and Europe since May, when surprise output cuts by Saudi Arabia and some other members like Russia took effect. And so they didn't expect these announcements or these cuts to start taking place till January, but they decided to go ahead and do them because they're a cartel, right? And they want to do what? Keep the price of oil high, which of course raises diesel prices. It's going to raise our gas prices. And remember, the only reason gas prices went down last time is because we released hundreds of thousands, I think millions of barrels actually, in our strategic oil reserve, right? So I don't think we're going to be doing that anymore. Matter of fact, we got to refill the thing at some point in time because it's like at levels since like the 1980s or something. And so it's going to be interesting to see, because if you thought gas just went from 5 to like 3 something for no reason, that's what happened in America. Well, now we're not going to be doing that. So if these guys get their way, it's going to be $90 or more for a while. We'll see how that affects what? Inflation. And they're expecting inflation to start ticking up again. And so we'll see how the market wants to react to that. We'll see how the Fed wants to react to that. Now, if you look at the Fed balance sheet, they've been running it off, right? Fed's debt holdings have, down $1 trillion, which, applaud them. Let's give them applaud here. They have been running it off. But here's what's really crazy, guys. We've been talking about corporate debt and how it's going to have to come up and everything to be renewed and everything. But look at this. 31% of all outstanding U.S. government debt will mature over the next year. So obviously, over the last 15 years, this wasn't a problem because they would just refinance it at lower interest rates because rates were in the ground, right? And of course, the Fed was the biggest buyer. But now interest rates have more than doubled over the last 2 years. And so, boy, oh boy, this is going to make for some interesting times because you've seen what's happened to the deficit, right? The reason why the deficit is blowing up bigger than ever, and it's going to continue to blow up, is because I talked about this over a year ago before this started happening, but the interest on the debt is just skyrocketing. So just wait. If rates are still really high when all this stuff comes due, boy, I can't wait to see what the deficit is going to be for the rest of this year and the rest of 2024. Give me your projections in the comments, please. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And as I told you yesterday, if China and Japan continue not to be the big buyers they were before, somebody has to step in. We'll see who that is. I don't know who's going to be. And again, they got some program setting up next year, which I got to look into this still. It's a ways off, about repurchasing our debt, okay, our own debt. And so I'm not. I have to look into it. Supposedly they did it in 2001, so I got to research that for us and see did it have any effect on anything or how it worked. So, and again, please share in the comments if you got any thoughts on that. I always like to hear from you guys. Now, I will say this: it's like risk off, and I mean when I say risk off, right? It's when your trash stocks finally start to come down to earth. Okay, that's when it's risk off. It's really risk on when you see trash stocks rolling up. Now, what I mean by trash stocks, and I don't think it should offend anybody because I talked about these before, but like you got Workhorse, right? Massive move up, and what's been happening since basically the beginning of August? It's down 55%, right? So well deserved. The company has no business moving up. But again, it was risk on, risk on, risk on. Nikola, this is a hot garbage company right here. I even showed you their deliveries, and we all had a good laugh. But I mean, you look at this thing. And by the way, if you run this write-up, this is the king of the write-ups, right? Congratulations to you, 611% in 57 days. Kudos to you. Hopefully you bought yourself a vacation or even a new car with that kind of money. But now it's down 73%, right? Risk off. What's another one? Upstart I don't really call hot garbage. Upstart is one of those things that had no business being up like it was. Now it's down 56%. Because what is that lend now, pay later mess they do or whatever? In this environment, not so much. But again, that was another one. Congratulations, 445% on that move up. Hopefully you afforded a new car or saved it for college or something. And just as a FYI, this thing is sitting at basically major support right here. So you get a bounce here or you get another major drop, just FYI. Now, obviously we'll keep this updated. I'm not gonna do it every day. Still filling out that right shoulder right there. So this head and shoulder is absolutely still in play. Doesn't mean it has to play out. And when you look what happened, see that trend line right there? That middle trend line? Well, today, you can see that was really good resistance because we ricocheted off of it twice. All right, so it could not break above that trend line right there. Bears were still in control. Again, it didn't end as red as it started, obviously. You can see, looking at the hourly, I mean, doesn't look great. Obviously, because your MACD below the zero line, still trying to turn up, get some momentum going here. RSI is below that 50. It doesn't look all that great, but it's trying to get a bounce, right? IWM, still the perfect head and shoulders right here. Still feeling that right shoulder. But I'm telling you right now, this thing better catch a bounce. Like, this is imperative to catch a bounce. Right around, probably around like 183 right there. It needs to catch that bounce because if it don't, it's going to go down really quickly to around 178 if it gets in that volume gap. And already you know that, you just look to the left over there and look how it moved up in that same price range, right? Jettison up, jettison down, jettison up, jettison down. That's how this thing moves, okay? Now, should it catch a bounce pretty soon? I mean, looking at the chart right here, to me, you got that 100 moving average sitting right there, 200 right below it. You do have support right there. You look down, you got the RSI on the hourly here is getting into oversold. You got the MACD is trying to turn up, it turns some kind of momentum right here. And so, let's see if it can finally get a bounce. But again, if it breaks that level around 183-ish, then yeah, you can see some big downside very quickly. Now, Apple, of course, is what's dragging down the markets. Another 3% move down today, almost 4%. You can see the MACD looks like hot garbage. The RSI is below the 50 on the daily here. Again, we're below the 50 and the 100 moving average now. But it does have support coming up right around 175.50, or basically kind of hit support, and that's what bounced it, okay? And as I was telling members, the key spot, if this continued weakness comes, okay, what's going to happen is a lot of people are going to be sitting at 165, which is where the 200 moving average is going to be, which is where a gap is, which is where support is. You can bet money on that. And of course, the only reason this is happening is because China said their officials can't use iPhones, but then they're talking about expanding it to smaller parts of the government or whatever. And so that's the reason why it's freaking people out and stuff, because China makes up like 17% of the revenue, I believe, and it's going to affect like 500,000 iPhone users or something. So again, it could be FUD, but honestly, it's just them doing what? We ban stuff like chips and other stuff, and they said, let's go ahead and mess with you, because if you really want to mess with the U.S. and upset our people here, I'm talking our citizens, you just go after Apple. Why? Because like I told members, it's the number one stock in most ETFs, the big ones. It's the number one stock in most pension funds, right? It makes up, 7% of the S&P by itself, like 10 or something, 11%, maybe even more of the Qs. So, I mean, you mess with Apple, you drive that one down, you drive a lot of stuff down, and it upsets a lot of people. So imagine if they really want to play games with us, they could. And so just keep that in mind with Apple. We'll see how long that continues. It's obviously due for a bounce, but we'll see, right? A lot of pressure. Now, Amazon, simple here. The 50 moving average is gold so far in 2023 especially. I mean, you can see all the time this has bounced. It bounced again today many, many, many times. I always tell people, find the stocks you own, that you want to own, pull up the moving averages, see which one they respect the most. There's usually one out of the three out of the 50, 100, and 200 they're going to respect. And this one got its bounce again today, up about 1.5%, if I'm not mistaken. You can see there is some divergence still going on with the RSI and the stock, but we'll see if it continues up from here. Now, you might have noticed Chinese stocks got obliterated today. I mean, wiping out billions in market cap. And the reason why, of course, here comes China's data, right? Their yuan is in the toilet, nearing a 15-year low. And, of course, their exports, which, of course, is what made them who they are, down for the fourth month in a row. And so it's not looking good. Again, like I said, their economy is in shambles. It is a hot freaking mess. And so we'll see if they come out with any kind of news about QE again or something. Now, BABA was saved by that ascending trend line, right there, and this triangle. And so again, it bounced again. It's bounced 1, 2, 3, 4, 5 times. If it falls out of that, it's going to be a hot mess for it. Okay, just keep that in mind for sure. But again, you got the 100 moving average coinciding with that trend line, and again, it is a demand area, so it is absolutely a place that has to bounce. Basically, if that is lost, then you can see a lot more downside to BABA. So just keep that in your head when you're thinking about this one. Now, Disney, I talked about yesterday and the day before. And look at this thing. Bounce to the penny on the bottom of this area we talked about. I said it has the bounce. It has the bounce. And what is so important about this area? This right here, if we look at it, this is the COVID low and a 2014 low. And it's where you got a little bit of support, right? So that's why you got the bounce right here. Again, it's just one of those things. It has to hold up here. If not, you're definitely going to be seeing a lot of people say, hey, this thing can go into the 75, then down into the 60s. We'll see. But what's happening to this one right here, and again, we've been talking about this technical bounce is going to get. Maybe it just finally got it today. We'll have to see on that. But what's happening is, if you look at this fundamentally, which is not what the stock's trading off of really, but it's just one, your net income is hot garbage. I mean, look at this right here. That's what it was going up. This is what it is coming down. You can see the years down there. So this is what happens when you try to build out a streaming network and all this stuff, right? It's very expensive to do. Now, to give the full context of this, you can see this is revenue, cost of revenue, and then net profit. Obviously, the revenue keeps going up. They do good on revenue. Look at the cost of revenue. How much is skyrocket? That's the second line. That's cost of revenue right there, right? And so, yes, building out streaming networks and things like that cost a lot of money. And you can see the net profit fell off a freaking cliff. And then, of course, I'm not even going to talk about all the other stuff that has to do with the politics, but that's another thing that is hurting this one, just like Budweiser and a lot of these other ones. So just keep that in mind as well. Now, last one I'll talk about, I usually don't talk about this one, but I'm just going to bring it up. AI, C3 AI. They reported earnings. Understand this thing is coming down to this trend line right here. Needs to get a bounce. Okay, if it does not get a bounce, it's going to continue to head down, because right now, and I told somebody this, I'm going to tell you what I'm going to tell. I'm going to tell you what I told them. It's down 47% since that high, right? And I'm just going to say this right here. There are red flags to certain stocks, right? Like Chinese stocks, what's the red flag? China. That's the red flag, okay? But with certain stocks, you got to think about this. All I want you to do, if you own C3 AI or you plan on buying C3 AI, especially if you're doing a long-term deal here, understand it is supposedly an AI company, right? So it's been in this AI bubble pumping up. So when it hits that trend line, if it bounces, you get a really nice bounce, okay? But understand, here's some red flags to watch out for. Look up how many names this company has had in 15 years. All right, you'll be stunned. I'm going to go ahead and tell you it's 4 in 15 years. And then why they changed the name. That's even more stunning. 2, pull up your revenues growth, right? Because remember, this is an AI company. NVIDIA, their revenue growth is off the charts, right? But we talked about you're going to have winners and losers, fakers and posers, and all this stuff are going to come out. Look at the revenue growth. 3, pull up the financials, and then look at the revenue and compare it to stock-based compensation for these executives. Because congratulations to them. Boy, they are making a killing, let me tell you. And you'll be stunned when you see the numbers. Or at least I was. And I was like, oh my goodness. And so just look at that. And so to me, and me personally, I will rent this stock. I will never own this stock. That's just me. Now, you may own it. I'm not saying not to do that. I'm just telling you. And I will not do it just because when I see red flags like that, and I don't trust the management, can't do it, right? Just can't do it. And so that's just the way it is. And remember, this channel is all about, I just find stuff. Sometimes you guys share stuff with me. I share it with you guys. Take the info for what you wish. I'm not trying to like push down a stock, push up a stock, or anything else. I'm just sharing it with you, and you can do what you want to do. It's the whole point in this channel. It's the whole point in having a community, right? Same way I did an NVIDIA members video about to show exactly why the revenue has jumped like it has, right? And then one of you guys shared with me a YouTube video on the same thing. I said, let me throw this in there too, so people understand it, right? Now, am I going to put that video out to the public? Ever talking to members? No, I'm not, right? And so there's a reason for that. It's not because I just want to hide it from them. But again, I never want to be accused of having an agenda on a stock, right? And so again, I don't short stocks. I've literally never shorted a stock in my life. I bought some puts and stuff like that, but I'm talking just outright short stocks. I just don't do it. I mean, maybe I ain't looking to do it because obviously you can make a killing. But if I'm gonna, I guess, short it, I'll buy puts or whatever. But no, it's not really my big thing. But I just, there's a reason. But I wanted to know there has to be something behind this huge NVIDIA bump. Because when people start using phrases like, wow, we've never seen anything like this before. Market's been around a long time, right? And you start seeing that, there's an AI bubble that's pumping up, and a lot of people are jumping on board. Okay, then I have to start digging. And then when I run across stuff, I have to share it. Some of that will be with the members. Some of that will be with you guys, right? And so I have to be careful about how I do that. But yeah, and so just let me know your thoughts on that and stuff. Again, tomorrow is weekly options expiration. There is no kind of economic data that should move markets tomorrow. There's no earnings that should move markets tomorrow. So it's just straight up shenanigans with the market makers and how they want to set it and what they want to pay out and all this good stuff. We know how Fridays can be, all right? And don't forget, this month is a huge quarterly OPEX. This is going to be a big one, okay? And it's not going to come, what is it, 7th? So it's like 10 more days or something. But anyway, I'll talk about that more when we get closer. So anyway, hope you guys got something out of it. Hit the like, subscribe button, guys. Go ahead and put in the thing. We're going to be green tomorrow or red, or are we just going to barcode the whole day? So anyway, see you guys later. Appreciate you watching.